Welcome back to the channel. Welcome back for another backtesting session. So we closed out, I believe it was Wednesday. We left it there, and so Thursday is CPI. So let's just recap where we were. It's been a good few days since I last looked at this. Okay, so no high time framework at the lows. Likely all are going to purge. I wonder where the previous day's high is here. So look. All the low, for that matter. Oh. Not sure why it keeps doing that, but oh well. Okay, we're back. Looks a bit better. Yeah, so no framework at the lows. Market repriced higher. This CB here, which we'll mark off in a second. Alright, so what I'm going to do is, as we've, well, let's see, let's just drop to the 15. Let's see what happens. I mean, ultimately I'd anticipate this to continue higher. Okay. Want to see this trade into the previous day's high. So I'm just going to drop this to 5 minutes. Let's just, it's outside our trade execution window for the AM session. Let's see what happens. Okay, so now we have had that tap in. So to me, we could anticipate this going higher now. So that's 2 o'clock. Go to the hourly. God, I'm knackered today. Go to the hourly. Okay, so is that Monday? Yeah. There's no hourly CB that's formed. Let's mark off the you know what? I thought so because the style's changed. I thought because of the update. That's cool. So it means that I can set up. I can set up like the. Yeah. Okay. The other levels that I typically have. Okay. Happy with that. H4 will stay the same. But yeah, I just noticed that they've, since their latest update, they've brought it closer in line with current trading view. Anyway, just want to mark this up for now. Okay. So that's the 4 hour, and the reason why I want to see that is because, okay, so it's further down. That's fine. So really what we want to see is displacement through here and then potentially a fair value gap. That would support the idea of higher prices if market is going that way, which certainly looks the case for NQ. Yeah, I would still anticipate this going higher. Don't really see why it wouldn't, but you never know. Anyway, we'll just continue this for now. See what happens. Okay, that's the end of the... Right, okay. So, that's the end of that day. What I'm going to do is we're going to skip forward now to Thursday CPI. Questionable whether I trade anything here. So that is that. Oh, no, I don't want to do that, sorry. I'll go one more. Okay. Just want to get rid of this. Let's get rid of all the hourly stuff. Now, typically I don't trade CPI, but let's have a look. You never know, we might be able to frame something. But, you know, again, if there's live markets and so on, it's just a day that I prefer to take off. I don't see the point in sort of trying to, you know, sort of trade CPI, if you will. It's a manipulated, it can be a manipulated news item. Give me a second. 1, 2, 3. Okay. So we do have SMT there between the days. Certainly if we wanted to investigate, it's probably not the cleanest. Oh no, sorry, I tell a lie. No, we don't. Let's just strip it there. Just give me 2 seconds. Why is my phone absolutely going crazy? Yeah, sorry, we can get rid of those. Right. So where are we? Okay. I just want to pop back onto the 4 hour. I just want to be able to utilize. So currently, that's the high of the. That's the high of the week currently. So that's going to be key liquidity pool. I'm actually going to change that now because I thought I'd sorted this out, but obviously not. Just want to emphasize the fact that that's an important high. Okay, so I'm just gonna call it that for now. No, it's a bit long-winded. And I want to take that same thing, and the reason why I'm doing that is because I just want to emphasize the fact that that's an important high for the week. That's an important high, and it's this one as well. And we'll get rid of this for now. Get rid of this. Okay, sorry, I know it's a little bit more sort of long-winded, but I'm just get rid of that, get rid of that, get rid of that. Just trying to see where we are. Let's trade it back below. I'm going to take this one out as well. Oh. Okay. And then we'll get back into the normal routine of how we typically do something. Okay. I'm going to take these levels out as well for now. And what I'm going to do is, now we've got the opportunity to do so, I'm going to just update these because we can. Excuse me. So we know that's daily. The border can become 40%. Sorry, 100%. Background drops 10. And the middle could become 100% as well. Perfect. So I'm going to save that as premium daily. Okay. So now we can just convert that to that. Perfect. And then we can do likewise here. Okay. Let's just do it with this one. Beautiful. Okay. So those are the key for the daily. We do have a volume imbalance in here, which the market appears to have rejected from, but I use volume imbalances more for targets than I do for. Now this is Tuesday's low. We are on Thursday, so technically speaking, this can now become a key daily low. Looks like I've done that one correctly. So we're just going to call it Q2. Okay. Oh, Jesus. What a mess. Okay. Get rid of the bold. I don't know why. There we go. Okay. Get rid of that. What I'm doing, I'm just organising the charts just so everything is reading correctly. Perfect. So we've now got a decent range to work with. Technically speaking, this we could drop this to here, or certainly wherever there was a CB. But nonetheless, for the purpose of this, let's continue. So let's get back into our process. So we're headed into there we go. So no clear low, but we do have a clear high. Okay. Right, so now we can, I think from that candle obviously is not complete, so I'm not going to mark up that. We do have the inversion fair value gap there, which certainly is overlapping on two assets, so that in itself could be a indicator of lower prices. However, I think it's important to see what happens here at this BISI. I think that's important. Reason being, if we find support, sorry, I'm back. Because if we find support, then we see a continuation of high prices. Now, the problem that I'm having right now, well, not the problem that I'm personally having, but why I'm reluctant to engage in anything. To me, there's no near-term high time frame framework. And because of that, I'm reluctant to engage the market. I don't want, I do like to see support from H4 imbalances. That certainly is true. But at the same time, I want that to be coupled with some form of high time frame framework before I look to engage the market. And currently I haven't seen that. So we haven't seen that at the lows, market symmetry. So I do think we're probably coming back to the lows. but I haven't seen anything yet to confirm to me that we're going lower. So let's begin our analysis now. We're sort of 20 minutes in, so yeah, let's begin our analysis. And again, I just want to preface by saying that it's highly probable that no trade will be taken. It's highly probable. So, as I said, because I don't typically trade CPI, but if there's a move, but again, that meets my criteria, then I'll consider it. So let's see what happens. Okay, so all right, IOF. Want to jump out from the daily. We want to go to the you know what? That's just so long. I guess it's not gonna. I guess it's not gonna really matter. No, actually, prefer it what it was before. Yeah, there we go. Keep it as that. Keep it as that. Okay, let's commence. So, jump out to the daily. So, one of the key observations that we've got obviously is the fact that we've got this unfilled CB here, or bearish fair value gap. Just call it that. I actually do prefer just for this one. You guys know it's bearish because of the colour. There we go. Yeah, let's go old school. Let's go old school. Right, okay. So, so we obviously saw the high time frame framework here. The market traded lower, failed to trade through this low, but they all failed to trade through this low. We saw a retracement back into a premium of this range. So what I would be looking for is potentially lower prices now, and based on the fact that IOF relative to this time frame appears to be bearish, and it is bearish based on the fact that if you look at the general trading lower, we turn into a premium. You can check that. Here you go. Turn into. Sorry, I got this the wrong way around. You get the drift. Into a premium, traded lower. So you could, in theory, use this. As you can see, traded back into a premium, traded lower into a discount. Now this one obviously failed to take out this low, but there's no reason why we couldn't see that happen now. You see, so for me, that's what I'm leaning towards, is the fact that this is still in play, although I would much prefer to see a lower time frame validation to go lower based on where we are, price and all of that sort of good stuff. But IOF is certainly to the downside. Okay. Just give me 2 shakes. Okay, so let's continue. So IOF, as determined. So this is, in my opinion, it's still to the downside. Still to the downside, following that high time frame correlation. The market has traded up into a premium of the range. Whilst also leaving unfilled bearish fair value gaps supporting the idea of lower prices. Now, it's not guaranteed, but certainly that's the narrative that I can see within the market, that is that bearish fair value gaps have either supported the market to reprice lower. They haven't been violated yet, so therefore the market appears still weak. Okay. Now, naturally, I do want to see a high time frame cracking correlation at the highs again to confirm and support further lower prices. However, if we see the BISI H4, so we just drop down to the 4-hour time frame now. Fair bit going on here. But if we see the BISI H4 traded to and through, well, then that supports the idea of lower prices. And because this is a H4 inflection point, sort of getting into if you can't frame a trade here to the high of this level, then it's best to just not engage the market at all. And with CPI, it's extremely possible that price could just trade higher, purge, trade lower. So many variables when it comes to CPI. That's why I prefer not to trade it. But if we see something quite clear, then absolutely, by all means, we will look to engage. Okay, so monitors are indicating they're going to turn off. Okay, so now, so relative to the 4-hour, currently it's bullish. So we're just going to make a note of that. So currently the H4 TF is supporting bullish PA, right? However, this is not. Let's look at this in a little bit more detail. Yeah. However, this is not confirmed by a high time frame cracking correlation. So monitoring price interaction with the bullish fair value gap H4. Okay, so that's what we're looking at there. So now when we're looking at internal to external, again, depending on the time frame we're focusing on, these lows, in my opinion, could be in the crosshairs. We could see this form a bearish fair value gap. Once this candle is closed, market could trade back up into it. We could see some form of cracking correlation here, and then we could see price continue lower. So there's a few options that we have, and then obviously he would be in the crosshairs. So we just have to see. But again, if we venture back out to the daily time frame, again, we can see at play, because this low hasn't been taken, and now ultimately this low hasn't been taken. We can see that potentially internal range to external range still exists. And that would be the likely play. Now, what I want to do is just want to view something just for my own curiosity, and I've probably done this already. So if we look at this range here, we can see that once this low had printed here, right, we can see that really the only fair value gap was here, which traded to. Let me just see, was that aligned? Yeah, which was aligned. Was traded to. Market went to trade lower but failed. So this is kind of supporting the idea that we'll see support from here and trade up into this unfilled fair value gap. What I wanted to see within this range was a 4-hour fair value gap that had held supported price lower. But we haven't seen that. Certainly it did here, failed to take out this low, and now we've traded higher and invalidated what would have been this PD array, supporting the idea that we could see support here and higher prices. Quite possible. But anyway, that was just to see what I was trying to determine there is whether this is going to remain a breakaway gap. And there's a possibility that it might not. So we'll just have to see. So internal range to external range liquidity. If we're looking at purely the dealing ranges, then in theory the lows could be in the crosshairs. Now, that's the obvious view, certainly as it pertains to this daily time frame. So we're just going to make a note of that. However, that may take longer to manifest. We may need to go higher, maybe into this CPI, before it trades lower. I'm not convinced that this is a bona fide reversal to, seek higher prices. I could be wrong, but to me, I'm not convinced that that's the case. So we're going to say relative to the daily TF, the market has currently left. The market has currently traded up into a premium of the range, whereby we could see the market now target external range liquidity in the form of the old low, PDL Q2. Again, I would much rather see a cracking correlation at the highs before price drives lower. That's what my preference would be, and that's why I can't help but think we could potentially trade higher and see a cracking correlation at the previous day's high before the move ensues lower. But we'll see. I am going to make a note of that. I would like this theory to be coupled with a high time frame cracking correlation to support and initiate the move lower. Okay, so now SPs. Drop back down to the 4-hour. Okay, so I have noted the clean and clear swing points above the marketplace, referencing the previous day's high, and where near-term resting liquidity will reside. Okay. This could support the idea. Let's not do that. Across all three members, this has formed above excuse me, the true weak open, supporting the idea of high probability shorts. TO. All members are currently above their respective true weak open, supporting the idea of high probability shorts. If coupled with high time frame cracking correlation. Okay, so currently there's no cracking correlation to support a trade idea. We're currently within a range. Yeah, we're currently within a range. And we could even look at now this micro range here if we wanted to. See where this may trade down into, and so on and so forth. So right now there's nothing for me to frame. There's no real high time frame narrative. So we're going to look at game plans. So first game plan is for me, ideally, the primary game plan would be the previous day's high, if we see a cracking correlation there. So we see a high time frame cracking correlation of the previous day's high, supporting the idea of lower prices. So that would be game plan 1. 2 would be I'm just assuming if the market didn't want to trade up to the previous day's high, but wants to continue lower, excuse me, then if it formed a bearish fair value gap on the H4 time frame, and we saw a cracking correlation there. Okay, so if the market was to form a bearish fair value gap and we identified an high time frame cracking correlation excuse me, supporting the idea of lower prices. Okay, so that's 2. Now we need a third. Better. Okay, excuse me. Now the question is whether the market finds support at that BC. So if the market finds support at the BC H4, and I'll be looking for some specifics. So we'll note a bullish break at M15, potentially even hourly. Then we and then displaces higher. This could leaving a bullish fair value gap. This could set the stage for a low time frame cracking correlation for a near term move to the previous day's high. Okay, that's kind of what I'm looking at. That is certainly what I'm looking at. There may be some other options, but again, with some of these, we want to be above the true week open or below. So that's where we're at with that. Now I'm going to drop down to the hourly. Let's see what kind of things we've got here. Okay, so we've got this London high. Which we want to note because so that could be key. Okay. And then we've got, let's say we've got, no, I'm not necessarily convinced by, yeah, okay. So the London high, let's mark that up. Okay, we've got no CBs or anything. We've got a lot of stat liquidity up here. Don't lie. So we've just got the London highs. Yeah, I guess that's the London low. Nothing really to add to this time frame. Okay. There's nothing to add. So just going to drop down to the 15. Let's add some. So we've got high impact news here. And we have equities open here. I think that's the main two. It's interesting how we actually have, looks like, according to the economic calendar, CPI, an element of CPI is up. no idea what was going on there then. Weird. Okay. So that's what we're looking at. So what we're going to do now, just want to check the hourly one more time. Yeah, okay. So we've got our game plans. Let's see what we see. So we're going to continue the 5 minute. Okay. So it's fair to assume that price is going to go to the CPI first. Okay, so now that's the CPI numbers. So we've got a breaker here. Be interesting to see if the market trades above the breaker or whether it continues lower. Lower appears to be okay. Equities open. Right, so now the market has traded above the breaker, which is here. Okay, now, yeah, it has, yeah, okay. So it's traded above the breaker. Just going to pop out to the hourly, see what the hourly candle looks like. Okay. Which is fine. Very choppy price action currently. So let's just play this on a little bit. It's interesting. Looks like we're going deeper into that CB. Okay. That's okay. As far as I'm concerned, there is nothing to do at all. Market traded lower, created newer lows. This breaker. Okay, let's see what we got. Looks like lower prices. Does it want to trade through? Hold on. What is this? Why have I got high impact news here? Weird. Okay. So we're now into the New York lunchtime. So it was kind of a very uneventful CPI. Extremely uneventful. Just going to go back out to the daily and see what we've got. Sorry, go out to the hourly and see what we've got. Nothing really screaming out as anything. So let's continue. Okay, market now sort of appearing to want to trade higher, although you know, if we're looking at the lows, symmetrical, find some support. So there's nothing really here to do, but the consolidation's good because that could lend us the opportunity. So now we're going higher. It appears as though targeting the previous day's high. Just going to venture back out to the 4 hour. Just want to take a look. And So currently, as we can see, price is bouncing between two fair value gaps, which not ideal. Yeah, absolutely not ideal. Appears to have found support at the bullish fair value gap and potentially violate the bearish fair value gap. Okay, and so that's the end of that. There's absolutely nothing to report on that day, as far as I'm concerned, in terms of different models. We found support here. We haven't violated yet, but to me, it's looking increasingly likely. That's the 6 o'clock candle. Then again, maybe not as likely as we thought. Certainly can see YM trading up to the highs. ES looks like as though that's what it wants to do as well, whereas I'm not so convinced with NQ. So that could end up forming an idea for us going into Friday. So I'm going to leave this one here. Unfortunately, yeah, couldn't frame anything. There was nothing there to frame. We were stuck between two high time frame PD arrays, which happens from time to time. So low probability conditions, but hopefully the consolidation will present an opportunity heading into tomorrow. So going to leave this session, this one here. I'm going to come back a little bit later on today to record another one, which will be Friday's session, and hopefully we can take something from the market to cap the week. But hopefully you found this one useful. Hopefully there's something in there that you can take away, and I will catch you guys in the next one.